If you live in Canada and want to start building wealth but don't know where to start, this video is for you. Because by the end, you'll know exactly how to start investing, even if you only have $100. Hey everyone, welcome back to the channel, where we simplify money and help Canadians grow wealth the smart way. If you're new here, hit that subscribe button because we talk about all things money, investing, and freedom every single week. Let's get straight to it. Here's the hard truth. Just saving your money isn't enough to make you wealthy. Why? Because of a sneaky little thing called inflation. It's silently eating away at your cash every single year. Right now, the average inflation rate in Canada is expected to hover around 2 to 3%. What does that actually mean for you? It means that the $100 you have today could be worth only $97 next year if it's just sitting in a regular savings account. It's losing purchasing power. So, the only way to grow your money faster than inflation is to invest it. And the good news is, it has never been easier to get started. You don't need to be rich. You don't need a fancy degree in finance. You just need to start. So, how does investing even work? Let's break it down in the simplest way possible. When you invest, you're essentially buying tiny pieces of businesses or other assets that are designed to make money. Over time, as these assets grow in value, you get paid. This can happen through things like dividends, which are like small cash payments, or through the price of your investment simply going up. Here's where the magic happens. It's a concept called compounding. Imagine you invest $100 a month into a simple ETF that grows, on average, 8% per year. After 20 years, you'd have around $59,000. Okay, but the crazy part, you only actually put in $24,000 of your own money. The rest, that's the power of your money making money for you. It's an exponential curve that can truly build wealth. Now, before you invest a single dollar, you need to open the right account. Think of these accounts as special containers that hold your investments and give you amazing tax benefits. In Canada, there are 3 main types you absolutely need to know. First, the TFSA, or tax-free savings account. This is the holy grail for beginners. Any money you make inside a TFS or gains, your dividends, it all grows completely tax-free. You can hold stocks, ETFs, and mutual funds inside it. It's perfect for getting started. Next up is the RRSP, the Registered Retirement Savings Plan. This one gives you a tax deduction right now on the money you contribute, which can mean a bigger tax refund. You'll pay taxes on it when you withdraw in retirement, but it's a fantastic tool for long-term planning. And finally, the new kid on the block, the FHSA, or First Home Savings Account. If your goal is to buy your first home, this account is a game changer. It combines the best features of both the TFSA and the RRSP. Your contributions are tax-deductible, and your withdrawals to buy a home are tax-free. So, which one should you choose? My pro tip is this. If you're just starting out, begin with a TFSA. It's flexible. It's simple, and it's incredibly powerful for building tax-free wealth. All right, you've picked your account. Now, what do you actually invest in? Where do you put your money? You have a few great, beginner-friendly options. First, and my top recommendation for most people, are ETFs, or exchange-traded funds. Think of an ETF as a basket that holds hundreds or even thousands of different stocks. This automatically makes you diversified, which spreads out your risk, and they have very low fees. A classic example is an S&P 500 ETF like VFV, which lets you own a piece of the 500 largest companies in the US, similar to ETFs or index funds. These are also built for simple, set-it-and-forget-it investing. Then you have individual stocks. This means buying shares of single companies like TD Bank or Shopify. This can be more rewarding but also riskier, and it requires you to do your homework on each company. Finally, there are robo-advisors. Services like Wealthsimple Invest or Quest Wealth basically do all the work for you. You answer a few questions about your goals and risk tolerance, and they build and manage a portfolio for you. It's hands-off investing. But if you're a beginner, I strongly recommend starting with a simple, all-in-one asset allocation ETF inside a TFSA. It's the simplest, most effective, and safest combination for the vast majority of people starting their journey. Okay, let's put it all together. Here's your step-by-step plan to start with just $100, and you can do this today. First, open a TFSA. You can do this easily online through a platform like Wealthsimple, Questrade, or even your own bank like RBC Direct Investing. The process takes minutes. Second, deposit your first $100. Third, use that money to buy a low-cost all-in-one ETF. Good options for Canadians are XEQT or VGRO. Just search for that ticker symbol and place your buy order. Fourth, and this is crucial, set up automatic monthly deposits, even if it's just $25 or $50 a month to start. Consistency is key. And finally, forget about trying to time the market. Nobody can predict the market's daily moves. What matters is your time in the market. Let compounding do its job. If you did this consistently every month for the next 10 years, your future self will be incredibly grateful. Before we wrap up, I want to share 3 common beginner mistakes that you need to avoid. First, don't chase hot stocks or the latest crypto trend you heard about online. Focus on your long-term plan. Second, pay attention to fees. A 2% management fee on a mutual fund might not sound like much, but over decades, it can eat up tens of thousands of dollars of your returns. Stick to low-cost ETFs. And third, don't panic during market dips. The stock market goes up and down. It's normal. Dips are a natural part of investing. Long-term investors stay calm and often see these dips as buying opportunities. Remember, successful investing is about patience, not prediction. So, let's do a quick recap. Start small. Use a TFSA. Invest in low-cost ETFs. And most importantly, be consistent. You don't need thousands of dollars to begin your wealth-building journey. You just need to begin. If this video helped you feel more confident about investing, do me a huge favor and hit that like button. It really helps more Canadians find this content. And don't forget to subscribe for more Canadian finance tips every week, from saving smarter to building wealth, $1 at a time. Thanks for watching, and I'll see you in the next video.